Gold prices pulling back a bit this morning, a reversal from the all-time highs that we've seen as investors pile into safe haven assets amid tariff policy uncertainty. Some experts linking the declines to investors taking profits from gold's gains. How should you navigate gold as an investment for your portfolio? Here with more, we've got Michael Gayed, who is the publisher of the Lead Lag Report. Michael, always a pleasure to grab some time with you. I mean, even as we take a look at the price of gold here this morning, I mean, let's just kind of hold space for a second at the fact that we're still holding above this, 3,300 level. And ultimately, there were larger questions around more largely what's the kind of all-time high new marker should be that we're thinking about gold. What is kind of your best analysis as to what's pushing this and how much higher we could continue to run?
Or maybe if the high is already in, I think there's another way to rephrase that question. Sure. Listen, I turned quite bullish on gold October 2023, and the last 3-4 weeks I've been getting more and more negative on gold's price, which looks like it could be entering some kind of manic fervor phase as I see more and more people convinced that the recent past is going to continue into the future. Let's take a step back. Gold tends to do well when there's demand for non-correlation in a portfolio. It's one of the few assets that tends to not really be correlated to anything. It marches to its own beat. It's not correlated to inflation. It's not correlated to deflation, not correlated to the dollar, not correlated to stocks, not correlated to bonds. So when especially institutional money is worried about a cycle turn in risk on assets, that institutional money tends to find its way into gold as a way of lowering intra-portfolio correlation. Now, nobody turned bullish on the retail side up until recently, which is, you can argue to an extent, typical because retail, no disrespect to retail, but retail tends to get in when it's often too late. And I think we're getting close to that point in the way gold prices have acted now. I have made the argument for the last several weeks that if we are in the early stages of what could be multiple pulses of margin calls, given the volatility that we're seeing in stocks, it is only a matter of time until gold becomes the source of liquidity to cover those margin calls. There's a very specific reason for that. In behavioral finance, there's something called the disposition effect, which means that people tend to sell their winners before they sell their losers. Well, guess what, folks? Gold is one of the few winners left now.
And so with that in mind, and if we did see gold used as a liquidity mechanism for people to cover those margin calls, what does that spell out for the rest of the markets?
Well, it should spell out better opportunities to buy low because at that point stocks would be lower and credit spreads would widen, and you'd probably see treasuries stand alone as the risk-off asset, the Phoenix rising, which is my whole gimmick and why I always wear this chain here. So the broader point here is that I don't believe gold necessarily is going to enter a bear market. But if you're going to be tactical in your timing, you might want to wait because it seems very plausible that if you just look at history, gold probably will sell off with everything else but with a lag, right? And that's sort of the argument of the covering of the margin calls. I do think there is a longer term argument for gold because independent of my own personal views on treasuries acting as the ultimate safe haven risk off asset in those pulses of fear for stocks, the whole idea of crashing stocks to save bonds, I do think that gold will still benefit anyway because we're probably in a bear market. And one that could last for a while. And I go back to retail is so used to buying the dip. The only way you punish that mentality is to make them keep buying the dip, and the dip gets dippier, okay? It keeps going lower on equities, right? In other words, there has to be a time aspect to retrain this mentality.
Michael, I wonder, as you're looking across the equities market right now, and you're seeing, still somewhere around 80% of the S&P 500 below their 200-day moving average right now, what are the technical indicators that are firing off signs to you of how to position your portfolio?
Yeah, I mean, and it's far worse, as you know, for small caps which are now halfway through a lost decade. Tell me more about this bull market we've been in when the majority of companies are back to 2020 levels. By the way, nominal, not after inflation. Look, I typically when you're below 200-day moving average, you tend to have volatility clustering, meaning you tend to have big declines and then big advances, like we've seen the last 2-3 weeks. To why I keep making this point that bear markets make fools of bulls and bears, because you end up having whipsaws galore when you're in these kinds of environments, ultimately with a path that's going to look like a downtrend, but becomes very nasty to sort of try to trade around. I think that's a dynamic that's going to persist for a while. And by the way, I think that's a dynamic that's going to persist for a while, not because I'm some perma bear, but because let's face it, the valuations are still very stretched. We can keep on blaming Trump from here until tomorrow. We can keep saying it's about tariffs. The reality is, any spark when the tinder is that dry, will light it up. Doesn't matter if it's Trump, doesn't matter if the reverse carry trade with Japan. When valuations are this extended and disconnects are this prevalent, it doesn't take much to have this all unwind. Now, all of this should be perceived as a good thing. Okay. And I say that because if you're going to be a real long-term investor, you want to buy low. I don't understand this obsession with things have to keep going higher and higher. Everybody should be rooting for a correction, rooting for a crash in stocks, in gold. Because if you got time on your side, then you might as well get it out of the way now.